Well, let me begin by saying we have a symmetric target. So we should worry about undershoots as much as we do about overshoots, but we should only worry again about structural undershoots and structural overshoots. In order for us to move to a scenario where we would have a structural undershoot, I would think that we would still need to see quite some deterioration in the data. We will have new projections in December, so I'm not going to say anything about sort of where we will end up. I cannot exclude anything, but it would seem to me that we would need to see quite some deterioration in the outlook before we have to worry about the risk of a structural undershoot. And that might then, of course, affect the pace with which we bring rates back to neutral. That might, in that scenario, accelerate that pace.
There is a phrase in the latest statement that the market thinks is looking just a little bit mouldy now, a little bit old, and perhaps needs updating, which is we are determined to ensure inflation returns to our 2% medium-term target in a timely manner. I mean, given you're at 1.7% in the latest data, is that statement needing a little bit of updating by December?
Well, I would not relate that statement to the 1.7. Actually, the 1.7 is a temporary blip. It's entirely due to base effects, and it will likely disappear from the data again in the coming months. So we really take a medium-term orientation for our policy, and that statement is meant to assure that yes, on the medium term, we are committed and we are dedicated to bring inflation back to 2%. Our target. Had we been below target, the statement would have been the same, right? Because we are symmetric. But we're still not there. I talked about wages, still being more elevated than consistent with our target. Well, the biggest decline in contractual wage growth, the deceleration still needs to take place. It's still ahead of us. It will have to come in the coming quarters and particularly the first half of 2025. So there are still some uncertainties around there, also on the upside, next to the risks on growth that we already discussed.
There are a lot of other international factors worth bearing in mind too, and something that was even discussed briefly at the press conference last week, but is a huge theme here this week, is the potential for further trade fragmentation, further trade tariffs. And we are setting up for the US election. We don't know what the outcome is going to be, of course, but there is a view that, look, there could be more headwinds if there are more tariffs, even on allies like Europe. How worrying is that outlook for you as you have assumptions coming through around growth and inflation?
Well, we first have to await the outcome of the election. I'm not a voter in the US, so for me this is an entirely exogenous event. It's pretty clear that if this leads to further trade fragmentation, that will be bad news for American citizens, it will be bad news for European citizens, it will not be good for global growth, so there also. But I think the effects on inflation, and that is what I am paid to worry about, the effects of inflation are not so easy to pinpoint beforehand, because there might be some contradictory effects there. If there is an overall decline in confidence, that will definitely have a negative effect on growth and inflation. But at the same time, trade barriers are negative supply shocks. They tend to push up the cost of production and thereby could give rise to another inflation wave. So what I'm saying is that the inflationary effects are not so easy to determine beforehand. So we will have to see how this will play out.
And let me give you a chance to talk about the Dutch economy, because it's been an unusual path this year. Weak first quarter, bounce back in the second quarter. How is the latest quarter looking to you?
Well, I think the Dutch economy is actually recovering. So we have seen a strong second quarter, and I haven't seen the numbers yet for Q3. But I mean, the indications we have is that Q3 will also have a positive growth outturn. So we had 4 or 5 quarters of stagnating growth in 23 and early 24. I think we turned the corner. I think the consumption recovery is visible in the Netherlands. Let's hope that we are a harbinger for the rest of the euro area.